Hi, I'm Peter Rose, founder of Longwood Currency Trading. Being at my Forex trading desk saved me losing 8% against my bank today. Let me tell you a little bit about that. Before I do that, I've had an email from one of you wondering why every video that I do, I'm in the kitchen looking out the thing. Well, look, I live in a 1775 antique cake house in the Lakes region of New Hampshire, up on a little mountain. We live on a little mountain, and the view out the back is just spectacular. And I love cooking in the kitchen, and it's very comfortable here. It's very light. And so, talking about living here and how wonderful it all is, let me show you what I did today. I had to haul in three big cartfuls of wood for the wood stove because it's still really cold around here. It was down 20 degrees last night, Fahrenheit, and during the days it's like 35, 38 degrees. So it's chilly, so we only get the wood stove going, so I had to stack that up. Even though the snow melted out there, you'll see, I'll put some pictures up in a short video. Stay with it. It's just entertaining, and then we'll get back to being at my Forex trading desk saved me losing 8%. And my library, which is where I would usually do my recording for these videos, is just a shit mess. Because I got a new computer and there's papers all over the place with stuff that got backed up that I wasn't able to cover. And so I'm just coming back from that mess. I'll go back in there at some point and talk from there. But for now, I'm in the kitchen away from my trading desk because of the fact that I was at my trading desk today and I was watching price action early in the morning. It was about 7 o'clock, I guess. I'm at East Coast U.S. time. It was about 7 o'clock. And watching, and it wasn't anything particularly that I thought that I should be doing. However, price action was indicating that there should be some movement. So I was sitting there enjoying my coffee and catching up on emails, and a couple of students emailing me, and just having a grand old time. And I looked at my charts and I thought, wow, this price is just really, it's ready to go. Let me go in with a feeler and see what happens. So I went in and I was up about 0.6%, something like that. And I thought, well, maybe I'll jump out of here. It isn't quite moving really the way that I would like to see it, but let's just hang in there and I'll just go with it. And the thing turned around and started to go against me. So instead of being 0.6% up, I went to about 0.4, I think I don't even know what I closed it out, but I went hit the close button, and I think I'm down 0.4 or 0.5%. Okay, that's fine. Let's look at the economic indicator releases. This happens to be Thursday, and so I end of March 2026. Took a look at the housing indicators, and there was new home sales, which is one of the major indicators that comes out in the U.S. anyway, major home sale numbers coming out. And they were looking okay. But, based on the economic conditions that we're in right now, that could really be a big deal, or it could just be a non-event. Maybe I just don't want to be in here. I'm sitting here watching this thing, and I'm thinking about going back in, because if that number comes back stronger, which is what I thought it would do, I'd be able to pick up my position again and work from there. But I wasn't sure. So there I am sipping my coffee, and I looked over at the chart, and boom, The price had moved like, phew. Oh man, if I would have been in that trade, I don't know how short that is. I should probably go and look at the bar, but I would have been 8% underwater. 8%, not 0.8%. I would have been 8% underwater if I would have had a large, if I would have had a trade on and not had a stop. Because usually, if I'm sitting at my desk trading, I don't put the stop on there because I'm there. I've been trading for a long time, so I'm smart enough to go, oh, that's not going in my direction, and I get out. If I'm going to go get a cup of coffee or something, I'll go put a stop on it. But when I'm trading, and it's what I teach my students, is when you're trading, your ass is at the trading desk and not wandering around taking a pee or getting lunch. You're there. The advice that I give in the Fast Track course is if you're going to trade, you sit there and trade. The Fast Track course is designed to cut out an hour and a half or 2 hours of your morning, maybe as little as an hour, to show you how to evaluate market conditions so that within that hour and a half period of time, you know at the start, within 15 seconds, as to whether you should be there looking at trading or not. If there doesn't appear to be anything that could happen in that 2-hour period of time, and there's ways of determining that, you close the platform down and you go to work early. Or in my case, I leave it open. I'm retired. I could sit there and look at it. But you can't because you got to get to work. And so that course, when it says, when you sit down to trade for that hour to 2-hour period of time, you sit at the desk. You are not getting off to go to the bathroom, to answer telephone calls, feed the dog. You're there. That's your job. Your job is to spend an hour to 2 hours a day and make a percentage enough gain against your bank that will significantly impact the replacement of your job income. But generally what happens is that you'll fall asleep and you'll take an 8% hit against your bank. And that's what the killer is. So you need to be sitting at the desk, not set and forget and walk away with a floating stop behind your price. Because if you're relying on that to happen with the volatility that we're experiencing currently, and it's a little bit more than what it would normally be, we're not the dog in this. We're the tail. And we need to learn how to be a good tail instead of a crummy dog. We don't have the capability of doing that. Our $30,000 bank or $80,000 bank or whatever bank size it is that you're trading with. Maybe you're just getting started with $10,000 account or maybe even you're trading some minis. But those of us that are just regular retail traders, we're looking to compound our accounts to become large enough so that the reasonable percentage gains against our bank on a monthly basis will provide significant enough income so that if we had to pull that money off, it would be a good percentage of our job income. There's probably, I think the statistics right now is that 30% of the workforce is going to be unemployed or displaced, this is a better term, because of the AI situation and quantum computing and all this other stuff that's happening right now. We don't want to push the trading too hard. We don't want to sit at our trading desks too long because we'll find trades. It can be very relaxing. The trading should be very relaxing. I've lost 0.5% for today, and that's probably all I'm going to do for the day. I'm probably not going to trade again because as time moves on, at noontime, where I am in the U.S. East Coast, the European sessions are starting to wind down. So, I don't know. I'll just keep having coffee, keep stacking wood. When you are trading, please have the discipline to have a set period of time that you trade each day. Don't have that set time go beyond 2 hours. maybe as short as an hour, because you'll be hyper-focused then. You might not trade every day. You may only trade 100 days a year instead of 200. But if you can make a small chip in that, you trade 100 days and you average 0.5% against your risk. So just think about that. What the effect of that has on the growth of your account. Don't be greedy and try to make 30 pips in a day. You have to be trained in how to look at entry analysis and the position management to see what's reasonable for the number of pips that you can gain, and try to learn how to capture as much of those gains as you can, so that in your win-to-loss ratio, when you do make those losing trades, that they're, first of all, not too big, and second of all, that you're not jump ball trader 50-50, you're at least 60-40, 60 winners out of 140 losers. You can make that work at just about any profit differential level, or what I call per trade expectation. So be sure that the training that you're going through, or the training that you have, is supporting process-oriented trading in setting up not only your rules for your trading, which are flexible because they're condition-based, you're feeding different information in your trading plan, so you have this flexible rule structure, but that flexible rule structure is supported on a static methodology, which also has its rules. But those are methodological rules and not trading rules. You have to have this in your trading plan in order to do what I'm saying that you could do. If you are not trained, if you don't have the training with somebody actually working with you, you're not going to just be able to trade for an hour and be satisfied with your gains. You're just not. And I've been looking at the Forex market since 2007. I've been looking at general financial markets since the mid to late 1970s. And I've talked to traders, and I've seen a lot of shit. And all I can tell you is, if you don't have a structured learning process and you're trying to push the envelope, you may be successful for a while, but when the losses come, they're catastrophic. So if you have questions about this stuff, send me an email. I'd be happy to chat with you. I'd love to get a conversation going with you. Not going to try to sell you a course. I don't have anything to sell you. If you decide I know what I'm doing and you want to participate, you can ask me about the course, and I'd be happy to share the information with you with no pressure to buy anything from me, because I'm pretty busy anyway, so I don't need to be busy again. But I'd love to have you at least communicate with me and chat with me, because I enjoy that. I have folks that I've been chatting with for 3 years. They have no intention of buying a course from me. They're just trading along and having a good time. Some of them not so successful, and every now and then they'll send me an email. We'll chat about that. No charge. And I don't mind doing that. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.